Our next speaker is Matthew Schneider, CEO of Building, who will discuss the growing role of construction data in tokenized real estate. Please join me in welcoming Matthew.
I think that's my cue to jump in here. Well, I know we're a little behind schedule, but that's okay. It's my pleasure to take the mic and talk a little bit about tokenized real estate. I've got a short presentation that I'm going to walk through, and there might be some contrarian takes for a tokenized event, because we think that there's a lot of heavy lifting that needs to be done in the space, but that's why we're all here, to have the hard conversations and figure out how we can actually bring innovation to the tokenization space. So let me pull up my screen share. And I think we should be all ready to go. Yep, I see myself in the corner there. So as a brief introduction, I'm Matthew Schneider. I am the CEO of Building, or sometimes called Building Inc. You can scan our QR code in the corner there to check out our website and see what we're doing in the real estate industry, as well as tokenization and enterprise blockchain. I've been in the space for about 4.5 years now, and I've had the pleasure of traveling around the world to regions like Hong Kong, Saudi Arabia, Japan, and different places in North America to talk about tokenized real estate, how blockchain is being used to change construction, the real estate industry, talking about data management and artificial intelligence. You know, over the past 4.5 years, I've learned a lot about the industry and seen it grow, as have other folks on my team. You know, Jonathan Chambliss from Elevator Labs, and Dante Cervantes, Ben Larson from Arizona CAD Services. We've seen how the conversations around liquidity, price discovery, fractionalization, these concepts have started to change, especially as institutions begin to enter the tokenization industry. The dream of having a lot of tokens, you know, being traded all the time, like it's the stock market, and seeing that in real estate is a little utopian, is the way that we would describe it, because real estate as an investment product is very, very different. The way that it's analyzed in terms of risk and how it's allocated to portfolios, and even just the nature of it. Real estate is a very physical thing. It's a complex object that exists in the real world. It has to be managed, has to be taken care of, has to be built. And these are things that take years. Nonetheless, the reason why it's a target of major discussion is because it is a massive market size. Now, we focus on commercial real estate, and so these numbers reflect commercialized real estate, whether that's multifamily, office, retail, mixed-use assets. Although real estate itself, if you look at houses, for example, there's still a huge market there. Being such a large market, there's a lot of opportunity for capitalization. And so there's been a number of companies that have expressed interest in tokenizing it. They have not been quite successful at scale just yet, even as the institutions enter the scene, knowing that only $200 billion of all financial assets have been tokenized. And then you're looking at, you know, 37 trillion for commercial real estate, or hundreds of trillions for real estate. How are we actually going to get there? It's not quite a question of tokenization, but actually digitization. So if we look at the tokenization continuum, how much work has to go into tokenizing or digitizing a particular asset to actually turn it into a digital asset? And in the case of real estate, because it's fragmented, it requires physical intervention, and it's very heavily regulated. It actually doesn't make for a great tokenization use case. Other financial products like that are native to the digital realm, perhaps whole life insurance would be one, or certain types of derivatives. Those are easy to tokenize because there is no real world component. As soon as you start tokenizing something that's in the real world, you have a gap between that digital asset and the real asset. And as it currently stands, that gap is widening. If we're not uploading information, collecting information, then our digital assets become almost a fantasy where they don't really reflect what the real world asset looks like. And suddenly a tokenized asset is worthless. If it doesn't have real value, if it doesn't have real data supporting that digital asset, it can't really be worth anything. And this is the question that we wanted to solve. How do we take the real world asset and make it as closely aligned with the digital asset as possible? Or to say that a different way, how can we have the digital asset closely represent the physical asset? Real estate itself has a lot of problems, and this is part of why it doesn't make for a great investment product, at least in a tokenized way. And if we talk about illiquidity, a lot of the illiquidity stems from the fact that real estate doesn't have great price discovery. We don't always know what it's actually worth because we don't have the data to justify that valuation. The lack of data causes a number of problems as well, what we call data asymmetry. And this is why we have slow settlement. This exists throughout banking and finance in general. But inaccurate valuations, slow due diligence, which means that we can't properly assess risk. And if there's higher risk, then we're not going to move money into this asset class. A while ago, Bain & Company said that wealth managers want to quadruple their exposure to commercial real estate, somewhere around $16 trillion in the next few years, especially if it's tokenized. But they're only going to do that if you can mitigate risk when moving that into a client's portfolio. So real estate itself needs to be fixed before we can actually tokenize it, before we can finance it. And real estate is something that's complex, it's physical, it has coordination issues, it needs to be maintained. It has dozens of parties or companies involved in actually facilitating its success. So to go back to the basics, the key principles, before we can tokenize, we need to digitize. We need to be thinking about what does it look like when you're physically building the asset, when you're maintaining it. Tokenization presupposes several asset and data requirements. First, we need to look at the digital twin. So the materials of the asset, the schedules, the hardware, the maintenance, because we need to understand the property, what we're working with, and how it's going to stand the test of time. Then you start to digitize different components like contracts, finances, permits, upkeep, and factoring that into your income and expenses schedule or your waterfall. And finally, if we've digitized everything about the asset, everything imaginable from the very second that it's being designed to when it's actually being operated, then you start to see data symmetry. This is where your stakeholders are aligned. This is where the insurance companies, the lenders, the investors, banks, and all of the contractors, the owner themselves, everyone is on the same page. And this is actually the first really phenomenal use case of blockchain in real estate. It's in construction, and it's the ability to aggregate data and put it in one place without relying on one party to own the data. It can still be decentralized, and ensuring data symmetry. When financial institutions talk about operational efficiency, saving basis points or cutting out intermediaries, they're really talking about data symmetry because they want to be able to use a blockchain to have all stakeholders looking at the same information. There's no gaps, there's no discrepancy or contingency. And what this moves us towards is price discovery. Price discovery is where we actually understand the value of an asset. We can appraise it, we can evaluate it, we understand the risk, and we agree on that. And we can come to that agreement because there's no skeletons in the closet, as they say. It's transparent. Important documentation has been verified, important data has been uploaded and can be used to assess the health and performance of that asset. And then, once real estate is successful in that capacity, then you have something that can be tokenized. it can be capitalized, it can be financed, it can be used as collateral. In summary of that section, the digital asset, and this is a very important point, the digital asset is only as good as the underlying asset. That point is so good that I included it again on this slide. The digital asset is only as good as the underlying asset. Well, that means that we need a way to, one, improve the underlying asset. And so tokenizing real estate is actually more of a real estate question than technology. The technology is everywhere. It's a commodity at this point. But are we actually seeing solutions that use blockchain, that use AI and data management to improve the underlying assets? One concept of improving that underlying asset and then using that data for good purpose is four-dimensional asset data. So you can imagine 3D. What does this building look like? What's the geometry of it? And then 4D is the introduction of time. How do we build assets, build properties that have longevity? How do we maintain this data over the life cycle of this asset? And this is really important if you're going to have a digital asset or a token, where you don't want your token to represent what the building was. You want your token to represent what the building is. And that means that constantly, in real time, in perpetuity, we need a way to calculate the value of that asset and reflect it. And again, that becomes a question of digitizing data. And this is something that building has rolled out. I don't really pitch too much throughout this presentation, but to know what building does, this is the bridge. We are the bridge between data, everything about that asset, and that digital asset. Now, we are broker agnostic and we are tokenization service agnostic, so we can work with any company out there that wants to raise their digital assets to a higher level, and vice versa for the real estate developers that want to be data driven and need connection to some sort of issuer. Tokenization needs to be data driven. I've got a slide later that says we shouldn't just be tokenizing because we can, because it's low hanging fruit. You need to find value for the technology. And we have a few different ways that blockchain, enterprise blockchain, and security tokens can do that. First is enforcing compliance. We want tokenized real estate to be a gold standard. We want it to represent something valuable so that companies will go out of their way to tokenize their real estate. So this is a demonstration that we've met building compliance, reporting, ESG if necessary, that we are forward looking. We're taking in future maintenance requirements and factoring that in to ensure that, hey, we have cash reserves. This is an asset that isn't going to go underwater unexpectedly. Early feasibility, favorable insurance, whether it's accounting, insurance, or other stakeholders that have influence over our bottom line, to be able to show asset data, one, to collect it, two, to organize it, and then three, to present it to stakeholders and say, this has been anchored to the blockchain, it is trustworthy, it is reliable, there's no need for extensive audits, or if they're going to be done, it can be performed in a single click. That sort of enterprise use of blockchain, that's what the major corporations are interested in. If you see companies that deal with supply chain like Walmart or Amazon, the ways that they're looking to implement blockchain are not NFTs for sale on their website. It's enterprise use cases where, can we implement this in a way where there's no question about the validity of our data? And then finally, real-time valuation. The reason why you would want a digital asset is because it's moldable. It can update in real time. My PDF or my physical paperwork can't update, to reflect changes in the asset, the real physical asset. However, a digital asset can do that. And so if we want to get the most out of tokens, they need to be going up or down in value. They need to be an accurate reflection. This is where you're actually going to get people trading, because trading comes from supply and demand, volatility, that gives people a reason to actually trade. Otherwise, you're just going to hold on to it, which is okay, depending on what your investment strategy is. Tokenization, again, is a wrapper value. So if we go back to the data-driven valuations, when you're holding a token, you're holding the calculation, the equation that says millions of data points have gone into figuring out what this property is worth, and my token is a direct reflection of that. This is what financial institutions are, again, interested in when it comes to tokenization. The wrapper of value, knowing that when you're moving a token, it's not just an SPV of an SPV of someone's very quickly performed analysis of a financial product. It actually comes with all of that underlying information. It makes it a very comprehensive and risk mitigated investment product. So if we revisit our problems from the very beginning, from slow settlement to litigation and all these problems throughout real estate that stem from a lack of good data and then ultimately affect how that real estate performs in capital markets, after comprehensive digitization and tokenization, we'll start to see things like real-time settlement, instant settlement, real-time valuation, streamlined diligence, more compliant assets, which gives us better insurance rates and premiums, which gives us a better bottom line, which means the asset is performing better, has lower risk, and can be capitalized more efficiently. That's what presents liquidity, that you have an asset class that people want to trade, that they want to allocate wealth to. Same thing with funded. This is going to open up a lot of doors for global investors and different parties that want to get into high quality commercial real estate. Premiums, we were talking about that before with the previous presentation. Premiums that can be applied for liquidity or just higher quality real estate. Comprehensive asset data is key to discovering real estate value, but we do believe that tokenization is the key to unlocking that value. What can be done with decentralized finance is really, really interesting. Actually, I want to focus on collateralization because I think that's where the most value comes from. To be able to use security tokens of a high quality commercial real estate asset as collateral, that is unprecedented. That's actually where we think that most liquidity will come from, not necessarily from trading the asset, but using the asset as collateral. Because if we want to be capital efficient, we're not just going to sell our ownership, our equity stake or debt instrument of commercial real estate, because then there's capital gains tax, or in the case of an owner, if they're refinancing the property, this puts a lien on the property. There's more creative ways and technologically advanced ways that we can access liquidity. If I'm an investor, I want to stay in a commercial real estate development. I know it's going to take a few years to be complete, but at the end, that appreciation is going to be worth it. In the meantime, I can use my security tokens as collateral, receive a DeFi loan, and reallocate that capital into something that is cash flowing. And as long as the cash flow is greater than any interest I'm paying on that DeFi loan, I have fundamentally duplicated the amount of money that I have to play with. That's really, really big. That's how you unlock value with DeFi. So as a closing note, tokenization should be low-hanging fruit. If there's tokenized real estate, you should think of the items that we were talking about. Is it compliant? Is the real estate high quality? Is it compliant? Was it built correctly? Is it being managed with great efficiency? All of these things together will treat tokenization as more of a certification, where if something has been tokenized, it is risk mitigated and it's going to be traded. We need to start looking for a gold standard, a platinum standard in tokenized real estate. And I think that's what we're working towards here at Building, where all of that comprehensive data will exist in this wrapper of value that becomes a token. So as we say, intelligent portfolios begin with building. We're all about smart buildings, smarter portfolios, and smart cities. So certainly reach out, scan our QR code, and head over to the website. Thank you to the International Security Token Association for thinking of us and bringing us on. And I will have this presentation available for download on LinkedIn. So if we're not connected on there, be sure to connect, and I'll let everyone check out some of our references used. So thank you again. for the opportunity. I hope it was insightful about the future of tokenized commercial real estate.